Now here's the deal. When jobs are that strong, obviously bonds are going to go down in price and up in yield. Never really good for stocks initially, so be very careful. You may think that this is terra firma. I don't like a market where the interest rates shoot up. But in a couple of days, I don't mind because I think good is good. In other words, more jobs means get the Federal Reserve out of the picture and bring back earnings, and there are a lot of good earnings to choose from. Sometimes I just like to admit I got it wrong. I had been believing that Gap Stores was going to have a very weak quarter. Why? Because they actually in the previous conference call said that things aren't going that well, and then Goldman Sachs downgraded, and I fell prey to that. Now Gap has already made its move. It's gone from 37 to 40 instantly. But you know what? If it goes back below 40, you've got a very cheap stock on a valuation basis. The analysts are so stupid on Disney, it's really painful. When you listen to the conference call, they just nitpick. They do this puts and takes things. Here's the deal with Disney. If you backed out some subscription fees that they got in previous quarters for ESPN, you realize that ESPN was fine. There was an ESPN dead story going around. That is stupid. Movie schedule's really terrific. Don't forget, we got Hong Kong, big Shanghai. You've got major iterations of theme parks. Marvel's doing great. Another takeaway is go buy Netflix if you're a speculator, only because Disney made a deal with speculator. Disney's fine. I reiterate, Bob Iger, one of the great, most bankable executives in the country.